What's up, millennials? Today we're going to be taking a look at the exact fair price for a company called ARVL with ticker symbol ARVL. And this is a company that is focusing on electric buses and vans. Now, before we start, if at any moment during this video you don't really know what I'm talking about, please check out my full SPAC guide. It's going to be somewhere in the description below. And today we're going to be taking a look at method number 2. Also, if you want access to the Excel sheet I'm going to be using today, you can join our Discord for free. You can do so by going to nesami.com/discord. Then you can leave your name, leave your email address, and you're going to get access to it. And of course, don't trust me, verify me. I'm just documenting my journey here on YouTube. I'm certainly not a financial advisor. Don't copy my numbers as is, but use the method, use the numbers, use your own multiples to come up with your own fair price per share. For this video of today's valuation of the company ARVL, we are going to be taking a look at the investor presentation of December. I couldn't really find a more recent one. There might be one, but I wasn't able to find it, unfortunately. So it might be the case that some of the things have changed in the meantime, but I think the majority of the cases it's going to be more or less the same. So ARVL is a vertically integrated company that is working on electric vans and buses too. The production of their vehicles is going to start in Q4 of this year, of 2021, so they don't have any revenue just yet, but they do have about $1.2 billion in orders, mainly from UPS, which actually can be cancelled or modified in the future. Now let's take a look at the current valuation of this company, of ARVL. Right now it is not a SPAC anymore, of course, because it did start trading at $10 per share, but right now it's a little bit higher, as we're going to see in a minute. And we're going to see that they have about 606 million shares outstanding right now. So we can also see that they are going to have $669 million in cash on their balance sheet, more or less. So that means that we can already determine a few things. First of all, we can determine the market cap. If we first of all go into trading view, we can see that the current price per share has gone up to $14.37. So that's the number we can plug in over here in our Excel sheet. And that means that if you take that number per share, if you multiply that by the amount of outstanding shares, you're going to arrive at this market cap of $8.7 billion. If you then take off the amount of net cash they have on their balance sheet, which is about $669 million, then you're going to arrive at the enterprise value of $8.04 billion. So that means that currently, based on a price per share of $14.37, the company ARVL is worth a little bit more than $8 billion. But we, of course, want to know what a fair price per share is for this company. And for that, we're going to be taking a look at the future revenue of ARVL to see how fair the price per share should be. We're going to apply a certain formula to arrive, first of all, at an enterprise value, a fair enterprise value. Okay, so what we need is, first of all, we're going to take a look at the revenue of a certain year, in this case in 2023. And we're going to apply a range of multiples to that revenue to arrive at that enterprise value. So first of all, we need that revenue of 2023. We're just going to pull that from the investor presentation, which we can see over here is going to be about $5.1 billion. So that is the number you can plug in over here in your Excel sheet. Now, do keep in mind that this is a predicted revenue. We don't know for sure if this is going to happen, but it is a guess that we are going to be working with to arrive at our enterprise value. So now we need a fair range of multiples to apply to that revenue of 2023. And for that, we're going to be taking a look at some companies in the same sector as ARVL, companies like Canoo, Fisker, Hyliion, etc. So we're going to see what kind of multiples they are trading at if we look at their revenue of 2023. Okay, so if we take a look at the Canoo's multiples, we can see that in 2023, they are trading at a multiple of 2.3x. And again, keep in mind, first of all, this is an investor presentation of December last year. So it could be the case that the numbers have changed a little bit, but I'm still going to be looking at these multiples instead. So we can see Canoo has a multiple of 2.3x, Fisker 0.6x, Hyliion 3.1x, Lordstown 0.6. If we scroll a little bit to the right, Nikola 4.6, Workhorse 3.8, and Excel Fleet 2.0. So what ARVL says is, okay, if we look at all of these multiples of all of these similar companies in our industry, we can see that the median multiple is 2.3x. So that is the number we could be working with. So what I have chosen to do is I've come up with a range of multiples. Instead of just using one fixed multiple of 2.3x, I've come up with a range of multiples of 2x on the low end and 2.6x on the high end. Now, this is of course something you can change. If you believe that the range of multiples should be higher, maybe it should be lower, then you can change that in your in your Excel sheet, of course, to change your fair price per share too. Very well. So if we then go to our Excel sheet, the Excel sheet is already going to calculate the rest of the things for us. What it's going to do is the following. First of all, it's going to take that revenue of 2023, which we determined was about $5.1 billion, and it's going to apply that low multiple of 2x to arrive at a low enterprise value of $10.2 billion. And that high multiple of 2.6x to arrive at a high enterprise value of $13.2 billion. Then you can also say what the midpoint enterprise value would be, which is basically the average between the low and the high valuation, which would be $11.7 billion. That, of course, is the enterprise value. We want to know what a fair price per share is going to be. And by the way, we don't need to discount these back to the present because we are looking at multiples of 2023, not only for Arrival, but also for the competitors. If we had been taking a look at the revenue of 2023 for Arrival, and if we had looked at the multiples of the similar companies in 2021, for example, then yes, then we would need to discount those back to the present. But right now, all the years are the same. Everything is for 2023, so no discounting is needed for this method. So again, this is method number 2 of the SPAC guide. Okay, so we now have our enterprise values. What we now need to do is to go, first of all, back to a fair market cap. How do we do that? Well, what we need to do, and in the beginning of this video, we said that the difference between an enterprise value and a market cap is the amount of net cash they're going to have on their balance sheet. And according to the investor presentation, that is going to be $669 million. So if you take these market caps, these enterprise valuations, of course, and you add back the amount of net cash, then you're going to arrive at these fair market caps. So for the low end, 10.9 billion. For the midpoint valuation, $12.4 billion, and for the high valuation, $13.9 billion. And then you can take those market caps, divide them by the amount of outstanding shares, which we said was going to be 606 million shares, and then you're going to arrive at these fair prices per share. So for the low end, it would be $17.93. For the midpoint valuation, $20.45, and for the high valuation, $22.97. So based on these calculations, it looks like Arrival might be actually undervalued right now. Now, of course, don't trust me, verify me, always check what I'm doing, always check if the calculations are actually correct. And also keep in mind, we have been taking a look at assumptions. We've taken a look at the revenue of 2023. We don't know for sure if that is going to be the case. Maybe it's going to be lower, maybe it's going to be higher. We've applied a certain range of multiples. Maybe that range of multiples should be higher, lower. We don't know that either. So that means that if you change one of these multiples, the entire calculation is going to change and your fair price per share is going to change as well. So let me know what you think about this company. Are you bullish about this company or are you bearish about this company? Let me know in the comments. And with that being said, thank you very much for taking the time to watch this video and I hope to see you in the next one. Bye bye.